Welcome to another S&P 500 analysis. Today is October 9, 2021. The S&P 500 price action has been volatile and has been pulling back since September. And that resulted in a lot of people calling for a market crash. Is the market going to crash? Let's take an objective look at the price action of the S&P 500 and the other major market indexes, market sentiment, and the market internal, and see, is the market headed for a crash? Stay tuned. Now, looking at this weekly chart of the S&P 500, we see the price has been one-time framing down for the last 5 weeks, and also closed below this 10-week moving average in the last 2 weeks, and it broke the most obvious and widely anticipated wedge. So no wonder all those talking heads are predicting the market will crash. But are the market internal telling us it is in the process of collapsing? Let's take a quick look at this monthly chart of the S&P 500. The month of September has trapped a lot of dip buyers because it closed near the low of the month. Unlike the previous month, the dip buyers were rewarded by buying the dip as the monthly closed near the high of the month. And in the beginning of October, the selling continues, and that's silent. A lot of those been yelling about the market only goes up. But as you can see, so far this month of October has been positive after the initial dip. The question for now is, will the S&P 500 continue to move back up toward the high, or this is just a pause from the current pullback? Let's go take a look at the internals, those indicators that truly reflect what the market is really doing. And if you are unfamiliar with these internals, I have posted a link to my video describing the 7 most important market indicators to watch in the description below. These market indicators will open your eyes on how the market telegraph its intention to us. Now let's take a look at the sentiment chart here. First, we are looking at the VIX. As you can see, the VIX came back down and dipped below the 20th level and closed on Friday at 18.77. So the market participants are getting a little bit more complacent now once again. And also the put-call ratio dipped back below the 0.75 and sitting close to 0.67. So once again, the market participants are putting a little bit risk on. And here, looking at the internal for the up-down volume ratio, we see on Friday with the S&P 500 down almost 8.5 points. But the up-down volume ratio actually was in favor of the up volume by a ratio of 1.2. So there were 1.2 times more up volume than down volume. But the advanced decline did dip into the negative. So it did tell us that there were more declining issue than advancing issue. And the declining issue outnumbered the advancing issue by a margin of 328. And for the New York Stock Exchange new high, new low, we saw 72 more new 52-week high than 52-week low. There were 127 stock make 52-week high and only 55 make new 52-week low. And for the cumulative AD line, we did see that positive divergence here, and we saw that got resolved by having the S&P 500 bounce back up nicely. So right now there is no divergence between the S&P 500 and the AD line. And looking at the internal for the NASDAQ market, as you can see on Friday, the NASDAQ 100 actually closed down a little bit more than 76 points. And the up-down volume ratio was in favor of the down volume by a ratio of 1.2 times more down volume than up volume. And also the advanced decline, the decliner outnumbered the advancing issues by 943. And for the NASDAQ new high, new low, there were actually more new 52-week low than 52-week high. And on Friday, there were 97 new 52-week high, but there were 137 new 52-week low. So the new low outnumbered the new high by a margin of 40. And for the NASDAQ cumulative AD line, we did not observe any divergence between the NASDAQ 100 and the NASDAQ AD line. So before I give you my overall assessment of what I see from the internal, let's go and take a look at the price action of the individual indexes and see what they are telling us. Now let's take a look at this daily chart of the S&P 500. As you can see on the S&P 500, got a little bounce off of this 4304 area. And right now it came up to this trend line. It appeared that they have found sellers up here somewhere around 4430. And on Friday, seller retained control. And right now it dipped back to this trend line here. So what I'd be looking for in the coming days for next week is the possibility for this thing to come down and fill this gap and push us down here once again to test this 4304 area. And if see would it get a bounce back up to this trend line here, right? Because we're going to extend this trend line down, right? If it doesn't bounce back up and continue to slide down, they come down here, then we're basically looking for a test of this low here and somewhere dip below this 127. Because remember, we are only seeing a less than 6% pullback so far. So let me go and pull up this tool here, and we do a little bit of a major move here from the high, the all-time high, to the recent low. Okay, this is only 5.87% pullback. And if we are talking about from the high to this level here, and we're only talking about 6.88%, so it's about a 7% pullback. And even if we come all the way back down here, okay, that is still less than 9%. It's only a little bit over 8% pullback. And not until we get down over here, then we see a 10% sort of pullback. And then now we're getting into what we classify that as a correction territory once you get down to more than 10%. So you can see that these, last few weeks, although, yeah, we saw some decline, but this is all within the realm of a pullback. So for people to talk about a crash, I think that is kind of ridiculous. I'm not sure if they understand what they are talking about. A crash is when we see an S&P 500 drop 150 points a day and 1,000 point on the Dow Jones Industrial. Now that's a crash. Now let's go and take a look at the NASDAQ 100. Here we are looking at the NASDAQ 100, and we were saying that we were looking for a sort of a bounce off of this trend line here, and we see a nice bounce, but also got rejected up here on this declining trend line. So we're basically looking for rejection on this trend line and pushes back. So you can see the seller took control when it got up near this gap here on Thursday, and the seller retained control on Friday. So for the coming week, going to see will it continue to come down and fill this gap and come back down and test this trend line. So if it breaks this trend line, then I expect it to come down to this area here, this 13,713 area here. Okay, these are some of these pivot area. You see that this right here provides support, and here's some resistance here. So you see a lot of tests in this level here, on this level. So that would be one of the levels that I'd be keeping an eye on, is this 13,713. Although we do have this pivot high here at 14,073, and that could provide some temporary support, but I'm looking at this 13,000 a little bit more. So if we do similarly the little bit of a major move here to see what that percentage is so far for these retracement pullback. So right now in the NASDAQ 100, we saw a pullback of a little bit over 8%. And if we are talking about coming down to this level here at this 13,000 area, and we're basically talking about a 12.75%, so close to 13%. And certainly that would be in a correction territory. And I think that will spook a lot of these market participants that thinking the market is only go up, and been playing along with the large cap tech stock, especially those FANG stock. Even if pulled down back here, that's a 10% correction. Okay, at this 13 that level here. Let me see if I could pull this away at 14,073. right? So that would be a little bit over 10% correction for the NASDAQ 100. So keep an eye on these level here, 14,000 and also this 13,700. And if it decide to break this trend line, then look for this gap here to get filled. And only until it could take out this pivot high, then we could say it have reversed the recent pullback downtrend. Because the high here is 15,356. And for the Russell 2000, it is in the middle of this wedge here. So there's not much one could do here except to just observe, right? Is it going to come down to this 2195 and get a bounce off of that? Or is it going to come up at this 2297 and get another rejection? Or will it, break out and move above this 2297 or break below this 2195 and move back down to this 2134. So there are a lot of if here. I wouldn't touch the Russell 2000 right now if you have planned to put on a position. Right? I would rather wait for it to come down here at 2195, see what the price action looks like, and maybe look for a bounce back up, a little bit of a swing long type of play. And similarly, if it come up here at 2297, then look for a price action to possibly maybe take a short and swing it back down to this 2195. So right now, Russell 2000, I just kind of sit on the sideline and watch to see what it's going to do. And for the Dow Jones Transportation, it appears that it is trying to break out of this declining trend line. So we have to see, would it be able to make it back up above this 15,000 area? That is one of the level that we've been watching for potential resistance, and also this 14,242 as the potential support. Right now, it seems like it put in a double bottom here, and here's that pivot, double bottom pivot here. So it's kind of hovering at this level here. So we'll see, would it be able to push up, continue to push up to this 15,000 or come back down and retest these low. Once these lows are taken out, then we're essentially looking at this 13,656 area. And for the Dow Jones Industrial, these are the two potential possible scenario that we discussed in the last video. One is to come back down to this, lower boundary of this, balance area. The other one is to come up and get rejected up at this trend line, also in confluence with the upper boundary of this balance area near the 35,150. So we'll see, still kind of try to make himself up here. And right now, wouldn't be go chasing after this move here. So I'm going to see what it get up here and see would it present a possibility of shorting it back down to this 33,800 area, or is it just gonna come down here? Then we be looking for a potential, maybe a bounce back up, or a breakdown of this 33,800 for this 33,000 area. Okay, so the Dow Jones Industrial been holding on fairly well actually, and we take a look at the recent pullback from the low here, from the high to the recent low. So it had a 5.66% pullback, and even at if it come down to this this level here, this low, we are still only talking about a 6.6% pullback. But let's see what it is down here. Okay. Right, that's a 10% pullback. So that would be in a correction territory if it come down to somewhere around 32,000 level. Right, so just keep an eye on these potential pivot low for the pullback to possibly target. But again, I'm basically waiting for this to come up and see would it get rejected up here, then maybe initiate a short swing down to this 33 1,000 level or to one of these pivot low here at this correction territory targeting this 10% area. Now let's look at the 10-year yield. You see this 10-year yield move above this 15.88 or 1.58%. On Friday, it closed at 1.605. Remember, we'll keep an eye on this 1.7625. If we get up to this level, we're going to be, the market is going to be in a lot of trouble here when it get up to this level here. So, so watch this, and unless it could dip back below this 1.58 and come down to this 1.4, but I don't see that in the near term. I think the 10-year yield will top around within this zone here between this 1.58 and 1.63 for a little while, and then come back up, continue to move up and hit this 1.7. Then maybe we get a little bit stronger reaction and pushes back down to this 1.58. So in other words, we'll keep an eye on this top here, right? Maybe it will hop around and then come up to this 1.7, and maybe it will try to come back down and retest this area here. And when the tapering start, then we probably will see it push up to the 1765. I think that will spook the market, down to that near that correction territory or near that 10% area for the S&P 500. So with the 10-year yield went up, the dollar did not push up much at all on Friday. As a matter of fact, it pulled back a little bit. So we'll see, because I'm still watching for the dollar to come up to this 95.70 before we get a little bit of a rejection and then pushes back up to retest this 94 level. And so for the crude oil, we're basically looking for it to come down to this trend line, the 95 level. And on a Globex overnight session, it actually did dip down to below that 95 level. So although it did not clear this zone here, come down to this trend line, but you can see it dip down and then now it pushes back up. So again, it is it did went above that $80 level on Friday. The high was $80.11, and it closed at 79.35. I continue to watch the oil to continue to push, higher. And right now, it could, like Goldman's have put out a $90 target. So I wouldn't be surprised that it will continue to push up toward that target and see would it actually hit that target or not. So we'll see, because right now, definitely the oil is continue to show strength on the upside here. So we'll watch the that 80 level, and if you could push up to the 80 level, then next level look for that 85. And for the silver, we essentially was watching to see would it come up to this trend line, get rejection up at this trend line, then we see it pushes back down to this $19.60 area, in this zone just underneath this $20 and just right above the $19 zone. Okay, so right now it seems to be trying to get up there, and also we see that the seller came in and punched it back down to that below that 22.75. So we'll see would it still make another attempt to come up to this trend line. If it's not, then look for this pullback here and come down, dip below this low, and maybe come back up and back test this low before it make its final move down to below this $20 level on silver. Yeah, my take on silver is bearish. My bias is on the downside. Even though if it come up here, I'd be watching for resistance and get rejected, pushes back down. Okay. But if it could break above this trend line, then yeah, there's a possibility that it could push up to this 24.70. And here, gold is still chopping in this area here. Remember, I said, initially we were basically looking at this at a inverted head and shoulder pattern, and I say, this right shoulder is kind of too steep here, pulling back because it dipped more than that 282. So, but if it could come back up, and if it break this perceived to be a neckline for this inverted head and shoulder, and who knows, it might play out. But again, you look at it, if it come up, it's basically hitting this resistance, this trend line here as potential resistance, and if it breaks, it's most likely going to be a fake out, right? It's most likely going to come right back, and then it will, invalidate this this breakout of the inverted head and shoulder. So right now, I'm still looking for gold to come down to this zone, dip below this $1716, and retest these low here, 1677. And depending what it's going to do there and what the price action looks like, and I could, might look for a short, yes, a short down to this 1546, because I don't believe gold is ready to make a move higher yet. Okay, I think there's still going to be a little bit more downside, because a lot of people are talking about gold as a hedge for inflation. I haven't seen that much of a hedge for inflation from gold unless you're talking about hyperinflation. Because right now we're talking about inflation, what, 4%, right? From 2% to 4%. Okay, maybe we go to 6 or 8% in the next year or so, right? Okay, but we are not up at that 12%, 15%, 18%, or 20%. Now, when we get to those levels, then yes, gold is a hedge for that type of inflation. But if you're talking about 4, 6, 8%, that is nothing in terms of inflation. So that's why I am still kind of looking at gold as a more of a safe haven play than an inflation hedge play right now. So let's take a look at the SPY, the ETF for the S&P 500. As you can see, I have a composite volume profile here, and here is the point of control as of Friday. The composite point of control is 434 and change, right? So it's 434.25, 26 area, and right now the price is up above this 436. I have a little bit of a zone here. This high volume area here is also, we see a lot of support here, and now it turned back into some sort of resistance here and a little bit of a chop. Okay, so we'll see, will it come down and test this 436 and see what it hold, and if it doesn't, then essentially what I'd be watching for is for it to come down and test this composite point of control and see what it get a push up back up to this zone here, because this is a little bit of a high volume zone here up at the 444 area and the 442. Okay, if it doesn't hold this composite point of control, then I'd be looking for a continuation of a move down to this area here and possibly test this value area low, this composite value area low at 426. But before that, we also have a low volume zone here at 427.26 that could provide a little bit of a rejection up. Okay, so we'll be watching that. But if that doesn't hold, then we see that there is another low volume zone here that also could provide a little bit of a support here at 425. Okay, so those are the downside level to keep an eye on if it breaks below the 434 and 25 cents area. But if we could get a bounce, then we look for this 444 and 442, this zone here. And for the QQQ, the ETF for the NASDAQ 100, you see that it came up to this zone, this resistant trend line here and got rejected, and also in confluence with the point of control, the composite point of control here, up somewhere around 365, right? And now it pushes back down. So I keep an eye on this level here, 352.45. Okay, this is the next high volume zone here. See a little bit of a chopping action. So we might see price pulling back to this area here and see what it get a bounce. And if it doesn't, then I'd be watching this composite value area low near the 349 area here. Then there's a little bit of a low volume zone right below it also. So that's why I watch that 349 on the downside. But if it could get back above the point of control here, the composite point of control that essentially will break this, this resistance, this trend line, then we could see that it might be able to do a little bit of a checking here at this 368.78, and if we could get it back above that level here, let's say come down, then we could see another push up at this 374.80. Right, this is the composite value area high, and also there's a zone here. It's a little high volume zone, high volume node at 374, close to 74. So look for the 374 and 375 area if it pushes up and get above this 368. But I'm more inclined of looking at come back down to finish up this gap fill and get down to this 352 and possibly get down to test this 349 for the QQQ. So is the market gonna crash? Well, based on the internal and also the price action, my assessment is no. But would it continue to come down a little bit more? Yes, that's a high probability because we're still looking at a little bit more pullback, and I wouldn't be surprised to see a pullback down to this 7% or 8% level here. And that really would spook some of these newbies, right? That think the market is only go up, and also, get a lot of these dip buyer to start rethink about their dip buying habit, right? Because the market had conditioned them to buy every dip. So now we gotta have them readjust their thinking or their behavior that you can't buy every dip now because you will get punished instead of getting rewarded. So I did not see a market crash, but I do see the market have a little bit more downside to go. When people talk about crash, they really have to define what they meant by a crash. Because to me, a crash is we see 150 point down on the S&P 500 in a single day and over 1,000 point down for the Dow Jones Industrial. Now that's a crash. I mean, we could get into a correction or a bear market territory by selling off and trending down to this more than 10% and 20% level. But a crash, you have to understand what a crash is. Maybe my definition or my understanding of what a crash is totally different than the entire world. Okay, but for whatever it's worth, no, I did not see a substantial drop in the market. We could see more drop, but not to the point of a couple 100 points a day on the S&P and over 1,000 points on the Dow Jones. Be sure to smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.